All right, hi traders. Hope everything is going well. Today we're going to take a look at the Australian dollar, either the Aussie US in the Forex market or the 6A, the Australian dollar futures, trading the front month, which is June, which is going to be 6AM. M is the contract symbol for the June contract. And we found a very high probability seasonality trade in the Aussie dollar. It's going to be to the short side. You can see over here on the Smart Seasonals Forex, we have a 4.19 scoring, which is of course in the upper tier, 5 being the highest. If we flip over here to the futures market, we have the absolute highest score here of 5, and that's shorting the Aussie on or around May 1. If you go over to the Aussie US cross pair, it's a slightly different, only by about 3 days there. Start date of around May 4 with an end date of June 1, and the Aussie has an end date of May 28. So we're looking about roughly a 25 to 30 day, we'll call it a month calendar trade. See, the average profit's been about $3,000 per contract. That equates to nearly 300 ticks in the futures market, and you're going to see pretty much the same amount there in Forex based on a standard lot here of around $3,300 per contract. So let's go into the chart itself. This is a daily chart of the Aussie, and this is something that I've had marked up for quite some time. So I've already been looking at potential areas to short the Aussie, and now that we could not maintain this down trend line, we broke through. We are now marching up to the next logical area of resistance, and that will put us up here around the 6,700 mark, which also is the 786, which also happens to be around the 200 days. So that's what we like to see, all those multiple areas of confluence there. We've got high probability seasonality trade coming up literally in just 2 or 3 days. Doesn't mean that we go short on that precise day. We sit and wait for confirmation. So we know that we have a high probability trade to short the 6A futures or short the Aussie US and Forex. Get asked all the time, does the seasonality work in Forex? And the answer is absolutely yes. And we've got all kinds of data here that backs that up. You can see multiple trades here in the Forex market. So all we're doing is exercising patience. We're not going to short the market right now. We're waiting for the market to come up to this significant area of price structure or resistance here at the 6,700 mark, which also happens to be the 200 day and also happens to be the 786 fib retracement from this swing low made back in late March to this last swing high. And we'll be looking for some type of reversal candle or reversal pattern to get short at this level. Now, if we know that the average profit over 10 years has been around roughly 300 ticks, that helps gauge where we could look for potential profit taking if we do indeed get our short signal. So if we're shorting around 6,700, we would be naturally looking for around the 6,400 mark, which would take us back down here to this past resistance, which will now be support, and also would be near a retest of the 618 level. So that's what we'll be looking for. Again, looking to take shorts up around this area once we get confirmation. If you don't trade futures or Forex, you can trade FXA. FXA is the ETF that tracks the Aussie. You're going to see the exact same pattern set up here, but on the FXA, you're looking for a price. You're looking for price to come up here and tag this 66 to 67 area. See if we get some type of reversal for a move back down here into this area. So that's what we're looking at on the Australian dollar. We get excited when we see high probability seasonal patterns as well as high probability technical patterns. And so right now, we'll just wait, watch, and see. So good luck, good trading, and we'll see you on the next update.